Hello, my friends, and welcome back. I am Tony with Dirty Boots Capital, and today I want to share with you my thesis on why cash is a position in your portfolio today. So let's go right to the charts, and let me share this first one with you. So this is the TGA account with the Treasury. So this is essentially the checking account for the U.S. government here. So here we have, normally we're down around 100 billion prior to 2016, about 100 billion in the TGA account. Then you see it bumps up here prior to 2020, and then it spikes right during and after the pandemic. It had spiked, and this is where we had received all the stimulus from the U.S. government because they had a stockpile nearly, I think it was 1.8 trillion in the TJ account right during the pandemic. So they had plenty of money in the war chest at that time to be able to offer various forms of stimulus to the people, right? And so what do we see happening here again? You know, kind of bottomed out at the end of last year, but we see this year it has grown. It's at about just north of 800 billion. So this is part of my thesis in terms of, you know, I like to follow the smart people in the room and see what they're doing and see if it makes sense for me to do. So if the US government is stockpiling some cash for a rainy day, maybe they're building their war chest. It looks like that's what they're doing to me. Maybe they see a recession coming in our near future and they want to be able to have some reserves in their war chest to offer stimulus payments to soften the blow. Maybe, I don't know, I'm speculating. But if the US government is building a war chest of cash, as we can see here at the beginning of 2022, chances are I do too. So that's one of my, one of the points in my thesis is the US government. So next chart here is, this is a website that I like a lot, Trading Economics. They provide a lot of good charts if you're looking for price action on commodities and things like that, and what's happening in different countries. It's a great website to go to. I love looking at it. And this one is showing the China gold reserves, right? So we go back to 2000, and in the blue line here, this is China's gold reserves. And you see they over time have been stockpiling gold. So they're at almost 2,000 tons of gold in China. And then what I also did was put up here Russia. Okay, so Russia's the gray line, and you can see that today they have just south of 2,500 tons of gold. Okay, so interesting chart. You can definitely see that post 2008, they both definitely have started to increase their gold position. China, you see some steps up here as time goes by, and then with Russia, they were relatively flat in their gold reserves prior to 2008, but right after, you see, wow, look at this slope on this line here. You see them accumulating pretty steadily. So I'm not saying now is the right time to go buy gold. Okay, that's not what I'm saying. But I'm looking at what other countries are doing in terms of their positions. And so if other countries are accumulating gold, chances are I do as well. And so, albeit now may not be the time for me personally to go off and buy some gold, I am personally waiting for a further correction in the market, because in the stock market, that is, because typically what happens is when there's a correction, if we go down 10, 15%, there's some big players who are gonna get a margin call. And the only way for them to potentially satisfy that margin call is to sell their gold and silver positions. And as a result, historically, when that happens, we see the price of gold and silver drop, right? So that's what I'm watching for, to be able to get more of a position in physical gold and physical silver. So again, it's just charts that I'm sharing with you just to give you a kind of a thesis behind why I think cash is a good position to be in today. Because if I'm in cash and the market takes a dip, now I can go off and accumulate more gold in my portfolio. Okay. What else do we have here? Okay, so this chart here is the NASDAQ Composite, and it's showing year to date. So this is from January 1st of 2022. And what do we see here? We see a downward sloping curve in the NASDAQ, okay? And so we started off the year here at about, it was almost at 16,000. We're at 12,000 now. And so recently we had a little bit of this is a double bottoming here of the NASDAQ, right? This is what we call a double bottoming, where it touched down to about 11,300. It came back up a bit and then it came back down and again, touched at about 11,300. And now it's rebounding. So this could be a potential floor, a bottoming for the NASDAQ. It could be, but look at history, you know, we can go back here, came down, looked like maybe this was a floor somewhere around here, went back up, and then slightly shortly thereafter, it came back down to a new low back here in history. So we got to be careful with these upticks because new bottoming positions may be in the future. So anyway, as I look at this chart year to date, this downward sloping chart, I don't like it. Chances are it is going to go down even more this year. So again, back to my thesis on why cash is a good position to be in is because when things get to a low that I'm comfortable with, I need to be able to have that cash to be able to take action and buy, you know, either commodities or buy into a ETF or into certain stocks that I feel are undervalued. Okay, so cash is sometimes a very good position to be in. I know sometimes I think it was Ray Dalio who said cash is trash, and in some perspective, it is because of what's happening to the destruction of the U.S. dollar. And with inflation, it does have risk. But in terms of, you know, looking into the future here over the next year or two, I think there will be some opportunities for us to create our wealth by watching these bottoming patterns and seeing when we deploy cash into the market to create some wealth. Okay. And then I had a couple other things here I wanted to share with you, maybe outside of my position of cash being a position you want to have in your portfolio. But I just found it interesting. I came across this article here from Yahoo Finance, and they're talking about the baby formula situation here in this country. And so this one line struck me as interesting. The program for women and infants and children, known as WIC, right? I think we're all familiar with that program. The program provides food for about half of all US born infants. You know, I don't know about you, but that kind of struck me as just eye-opening, right? WIC provides food for half of the US born infants. I mean, I'm not going to say that sounds like a third world country, because I know they're struggling in third world countries, but in this great nation of ours, for half of the infants to get their food from WIC, you know, it doesn't really, you know, scream that we are in strong economic times and people are making a good pay and able to find jobs, right? It really makes me question when half of the children are basically being fed via WIC. You know, it's just I don't know. I guess I'll call it a canary in the coal mine, and I'll leave it there. But I want to share that with you, and you draw your own conclusions, right? I bring this data forward not to pontificate about, you know, anything I'm doing in particular or what you should do, or I just want to bring you the data, and then you make the decision for yourself, right? That's what I want to share, because some of this data, a lot of this data isn't shown on mainstream media. You're probably not going to find it on Bloomberg or Yahoo News or, finance or anything like that. So I want to bring you some of these charts and some of this data. Trading Economics website is a great website to go to for you to research and figure out where you need to take action. Okay. And then this next website here, this is the National Association of Realtors. And I think it was just last week they came out with this. This is their state-by-state economic impact of real estate activity, right? Sounds very official. And so what they do is state by state, they go through and they assess, the impact of real estate on the particular state. So we're just going to pick a state here. We're going to pick Florida, just because there's been a lot of news about people moving to Florida and moving to Texas and moving to Arizona. Those have been the states that have seen the biggest influx of people buying real estate. So here in Florida, they talk about the real estate industry accounted for nearly $300 billion, or 24% of the gross state product in 2021. So gross state product, think of that as, kind of like, we all know GDP, right? This is kind of like the GDP for Florida, and 24% of it is based on real estate, the real estate industry, the economics there. Every time a house is sold, it generates about $112,000 of economic impact to the state for every house sold. And they go into the details of how they come up with that. So you can look at that on your own. But the figure I wanted to point out here was 24% of the real estate industry is responsible for the gross state product in Florida. 24%. That just seems like a high number to me. Maybe you folks have a different perspective. But yeah, so you can look at this for each state. Like if you're in, let's pick another one here. Let's find Texas. Where's Texas? Okay, let's look at Texas. All right, so here we are again. Let me blow this up a little bit. So in Texas, real estate accounts for 17% of the gross state product. Okay, let's look at a couple others. What about California? People have been leaving California. So even there, still 16% of the real estate industry is part of the gross state product there, 16%. Again, it just seems like some of these numbers are pretty high numbers, such that when we do have some sort of softening or correction in the housing market, that it just makes me think, where are these states going to get their GDP, right? Their gross state product. Where does that come from? So it's just kind of eye-opening. And yeah, so it's just another data point that I share with you. Again, something like this isn't shared in the mainstream media, right? So maybe for you, you go to the National Association of Realtors, you pull up this just search for state-by-state economic impact, and take a look in your state, right? I don't know where you all are, but take a look at what your state is, right? Let's look at Idaho, right? I don't know, maybe there's some folks out there from Idaho, right? So 18% is for Idaho, right, of their gross state product, right? So pretty significant numbers here to take a look at and pay attention to. I'm going to see if I can find like a historical chart that shows what the gross state product is for states over time. But I at least wanted to get that in front of you so you could take a look at it and hopefully, do some critical thinking behind that, behind all those charts, right? The gold chart, the TGA chart, the fact that 50% of newborns are fed off of WIC programs. That just seems like a big number to me. So anyway, I hope this helps. I hope it helps in some of your decision making and some of the action that you take, and just basically trying to help you guys out there. So if you found this interesting, please give me a like. I appreciate that, and share it with some others out there so we can help as many people as possible protect their personal and financial freedoms. Thank you for watching.